the Federal Reserve is more likely to wait until November until announcing a formal tapering of its bond buying program, according to Goldman Sachs. Tune in for the most important finance news today by MasterDigest. The Federal Reserve is likely to wait until November until announcing a formal tapering of its bond buying program, according to Goldman Sachs. The annual get-together at Jackson Hole, Wyoming, has been at the forefront of investors' minds for some time, with sentiment shifting over the outcome. A speech by influential Fed policymaker Robert Kaplan at the end of last week prompted risk-taking after he suggested that the rise in COVID-19 cases in the country, largely due to the highly transmissible Delta variant, could persuade him to vote for a delay in the reining in of the central bank's massive bond buying program. Prior to this, the widely held belief within the market had been that the improving labor market and the high inflation levels would prompt the Fed to announce a tapering timetable at this meeting. Goldman Sachs said before the beginning of the gathering it had raised the odds that a formal taper announcement will come in November to 45% from a previous forecast of 25% and lowered the December chance to 35% from 55%. The Nasdaq opened at a record high on Wednesday, lifted by gains in technology-related stocks, while broader markets remained subdued ahead of a U.S. monetary policy update this week. Dow Jones futures yesterday were up 6 points, less than 0.1%, while S&P 500 futures were up 2 points, or 0.1%, and Nasdaq 100 futures edged up 17 points, or 0.1%. The broad-based S&P 500 closed 0.2% higher Tuesday, its fourth straight positive session, and a new closing high. The tech-heavy Nasdaq Composite rose 0.5%, also hitting a record close, while the blue-chip Dow Jones Industrial Average gained 0.1%. The quarterly earnings season is coming to an end, and it has been a largely successful one, helping to support the overall market. At the start of the week, 476 of the companies in the S&P 500 had posted results, and of those, 87.4% had beaten consensus, according to Refinitiv data. Huawei gets US approvals to buy auto chips, sparking blowback. The US has reportedly approved license applications for the embattled Chinese telecom company Huawei to purchase chips for its auto component business. Citing two people familiar with the matter, Reuters reported that the license applications the US accepted are worth hundreds of millions of dollars. The reported deal marks a significant victory for Huawei, whose business efforts have been stymied by strict restrictions imposed by both the Biden and Trump administrations. The Trump administration enacted trade restrictions on the sale of chips and other parts used in its network technology and smartphones businesses, according to Reuters. In recent weeks and months, however, sources told Reuters that the US has bestowed licenses allowing suppliers to sell chips to Huawei for various vehicle parts, including video screens and sensors. The approved licenses are reportedly a result of Huawei gearing its business more toward items that are less vulnerable to US trade bans. German manufacturers, often Europe's main economic driver, are growing increasingly worried that a global supply squeeze and rising COVID infections will hurt the region's economic recovery. The IFO Institute's influential business climate index fell to 99.4 in August from 100.7 in July, falling for the second month in a row. Supply bottlenecks for intermediate products in manufacturing and worries about rising infection numbers are putting a strain on the economy, IFO President Clemens Fuest said in a statement. Illustrating this, German exports to China, the country's second biggest sales market outside of the European Union, declined by 3.9% year-on-year, the first drop since August 2020, according to data released Wednesday. However, it's not all bad news, as European Central Bank Vice President Luis de Guindos said earlier that the central bank could revise up its macroeconomic projections for the Eurozone in September after recent solid activity indicators in the third quarter. TikTok changed its policies. Now cryptocurrency influencers consider moving to rival platforms, CNBC informs. Cryptocurrency content creators, who claim they are just trying to educate consumers about the emerging market, say they have been hard hit by rapid changes at the social media company. In July, TikTok implemented a system that can automatically block videos violating its policies, and the company recently updated its branded content policy, barring the promotion of financial services including cryptocurrencies, unless users disclose it through a branded content option in the app. Cryptocurrency creators for this story say they have posted educational crypto videos, yet their content is getting flagged or taken down permanently with little explanation from TikTok. Some said their accounts are also getting temporarily banned more frequently. Most of the influencers CNBC spoke with said they haven't been paid to promote any crypto content on TikTok in the last few weeks, and that video views and new followers have dwindled since July. The guidelines haven't been updated since December, though TikTok rolled out its new detection feature a little over a month ago when creators say the takedowns ramped up. Some of the creators CNBC spoke with are considering shifting to platforms like Google-owned YouTube, Twitter, Facebook's Instagram, and the chatting app Discord, where they say they have more freedom to share content. There have been few travel sectors worse hit by the coronavirus pandemic than the global cruise line industry. In 2019, it contributed more than $154 billion to the global economy, says the trade body Cruise Lines International Association. Then we all went into lockdown last March, and the world's cruise ships were anchored up. The plight of the sector is perhaps best shown by the financial performance of the largest cruise line company, US giant Carnival. In 2019 it made a profit of $3 billion, while in 2020 it reported a loss of $10 billion after its revenues plunged 73%. The situation in Florida in the US, the world center for the cruise line industry, is just making things worse. Their politics has got between the industry and its clients, just when the cruise lines were gearing up to reopen for business in July. In what is proving to be a disastrous relaunch for the sector, the U.S. Centers for Disease Control and Prevention is insisting that 95% of both crew members and passengers must have had 2 vaccinations before they can join a cruise. Thank you very much for watching. If you liked this video, please like and consider subscribing. Also, share this video with your friends if you feel so, and please, put your opinion down in the comments. If you want to know more about the finance, please check the links below.